Good afternoon, traders. Today is Saturday, May 27th. It has been a minute or two since I have done my last YouTube episode. A lot of things have been busy for me. I have been active on Twitter, however, every day. But as far as the active day trading has gone, I'm still not quite back to that routine like I had hoped. But I hope to get back to that within, I don't know, a week or two. You know, I'm just going to have to kind of keep riding with my schedule as I can. But I am active on Twitter. So, I want to have this special episode because this may be the most consequential episode I have ever, well, yeah, maybe, perhaps. One of the most consequential episodes I've ever done. On January 29th, I calculated using time money formula, time value, money formulas, that we will be at SPY 421. And you guys who follow the markets know what happened on Friday. We came damn close, didn't we? Yes, we did. Yes, we did. Now, today, I'm going to actually reveal what I believe the target, the actual target is for SPY in 2023. Today's mission objectives. I'm going to show you that secret bull market pattern that I have been tweeting about since February 4th. I'm also going to show you what I believe SPY's end-of-year target is going to be by December 31st. Well, the actual last trading day is December 29th. And I'm also going to reveal the end game, which I believe will occur in Q1 of 2024. Not this year. And then we'll get into some odds and end tweets. Important tweets, not odds and ends. Important tweets. On February 4th, I'll keep this intentionally vague for now to timestamp it. If 390 to 400 holds for February and March, it will go down in history as the all-time greatest hidden bull market. The market maker has kept a secret. I will explain more in April. Well, we're in here in May. Now we're almost in June. I see more patterns. I've had a lot of you guys since that time, a lot of you so-called experts claim with an emphatic exclamation mark, the bull market is over. It's over. I've looked at patterns from the last 50 years, and no, if you fail this particular moving average, it's over. But here we are as of Friday. We've made 2 consecutive higher highs since the February 2nd high. Did we not? Where are your experts now? Where are the mavericks of Wall Street? Where are the time money machines? Where are the Ron Walkers? Speaking of which, that's Ron Walker right there. Did you know? Look at you, Ron. Going for that 1980s Tom Selleck hairy chest look. Couple buttons down there that you didn't button up. Going for that ladies' night look, are you there, Ron? Yes. Anyways, moving along. Before I get to that secret bull market pattern, you know me, I'll need to prime the pump. And why do I like to prime the pump? It's so that I can checkmate you hooligan bears. That's right. I get to checkmate all of you. You suckers coming after me in February and March, talking trash. Now you will be permanently and forever silenced. Okay, what have I always tweeted? What do I always tweet? I need to see lift. Lift off the EMA 50. I need to see lift, right? That's one of the concepts that I always preach. What's another concept that I preach? I need to see wick up, right? Yes, I always preach that. Lift, wick up. What else do I also always preach? Consolidation under SMA 20. Do I not? I always like to preach that. Yes, I do. Yes, I do. Consolidation. What else do I like to preach? I want to see a back test to EMA 50. Yes, I always preach that. Okay, what else do I like to preach? I always talk about, ooh, that MACD is curling up. It's curling up. I always say that, do I not? Are you ready to see the pattern now? Here we go. This is a SPY monthly chart. It's the monthly chart. Let me zoom in over to the right for a minute. What do we have since the hive? The October 13th low. The low for the markets that I have been saying for months. What do we have? We have lift off of EMA 50. This is the monthly EMA 50. Up, 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 down, higher low, up, up. You have lift. You have wicks up, 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 up. You have the EMA back test. Actually, technically, didn't even really back test it. That's even more testament to how bullish it really was. In fact, since the month of October, since this is the monthly chart, it has never touched the monthly EMA 50, not once. Not once. 1, 2, 3, 4, 5, 6, 7 months into it. Not once did it even backtest to it. And what was it doing? It was consolidating under the monthly SMA 20. Right here. Right here. In fact, in February 4th, when I sent out, that was the day this wick almost touched the SMA 20 when I saw consolidation, 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 consolidation. Wick up, wick up, wick up. Higher lows, higher lows, higher lows. I was like, oh, you consolidate USOB. You're consolidating. This wick up right here, actually the wick high, it was right around February 4th when I sent out that tweet. Yes. I saw this, I said, holy smacks. You're consolidating because you're going to rip it up. And what happened now in the month of May? Over SMA 20. Pushing up over it. Opened up right at SMA 20, right? Open. Currently, that's the close. Yes. It was consolidating this whole time. Ha ha ha. That's right. All of the principles of day trading that I just primed the pump with, I saw on the monthly chart. It just stuck under your noses all along, you hooligan bears, you ungrateful 1 percentiles. Yeah, you know who you are. You know, besides being busy, I was busy. Actually, I wasn't. I have not been day trading. You know, for the last month or more. But besides being busy, which is really 90% of it, right? So don't misunderstand. There's a 10% of it that also, this is the 10%, not the 90%. 10% of the reason why I haven't really been posting a lot of episodes is because I stopped wanting to alert you hooligan bears of what the market's really doing. I wanted to let you guys burn. And burn you have, haven't you? But I stayed faithful to my Twitter followers because I'm still active on Twitter. I'm still active on Twitter to this day. Okay? So, if you choose to want to try to go and heckle me on Twitter, well, you're just going to get banned over there too. So there you have it, guys. All of the principles I have been preaching every day. Well, when I was day trading. Lift, wick up, back test, consolidation. I saw that in February. I said, holy smacks. And now. Oh, yeah, I forgot. Curling up. Remember, that's another principle. Curling up. Oh, yes. Curling up. Because what's it doing here? See this highlighted area? Zoom in. Curling up. Look at this pattern. Green, red, green. Up, down, up, 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 up. Uh-oh. Green, red, green. Up, down, up, up, up. And what was that pattern? Oh, sorry. Hold on, hold on. Oh, can't be doing that. You can't be doing that. Okay. What was this pattern in what year? I have been tweeting this also. 2019. So I've been dropping hints. I've been dropping some hints as we go along. What patterns we're looking at. Okay? So, having said all that, that's the pattern, guys. You got suckered. You got duped. And I'm glad, you hooligan bears. Now go home. Because now I'm going to reveal to you. I tweeted this last night. I may have figured out what level SPY will be at end of year. And therefore, by extension, what recession level the market maker is tracking to. Let me be clear. It's not what I think is the economy is going to do. It's not what I think whether we'll be in a mild recession and a moderate recession, excuse me, or not. I think this is what I think the market is tracking to. And I have factual evidence to support this. Now, as I mentioned earlier, I think we are setting up for a Q1 2024 showdown. Okay? Market makers want sneaky SOB. You guys seen the movie Kill Bill, right? The bride takes her revenge one at a time, one at a time. You're going to see that pattern. That's exactly what the market maker is doing. Okay. So, in a previous episode, I have shown this slide. Remember this? 44 SPY 421. That's a moderate recession. I have said that, and I actually have I'll show you an example. I'll show you an example in a little bit. I did a video on that in January. If it's a mild recession, SPY should be at 462. I calculated this. If there's no recession, 487. That's all-time highs. Okay? So, mild, moderate, none. Right? Got it? Okay. January 14th. January 14th, right there. I did a video, markets priced in. I calculated. I showed you my work. I encourage you to go watch that video if you want to know how I came up with these numbers. I came up with these numbers that we were just talking about right over here. Right there. Boom, boom, and boom. Right? 421, 462, 487. I came up with those numbers in this episode. For now, I want to call your attention to interest rate 2.69. I'm gonna put a sticky note on that. We'll get back to that. 269, okay? Put a sticky note on that. But in this episode, markets priced in, I calculated SPY 421 will be the target in the scenario of a moderate recession. Okay? That was my this was just my general approach at the time. I went more conservative. I said, you know what? Let's assume it's a moderate recession. Let's not go no recession. I'm not gonna be all like permabull. Let's go moderate recession and see what SPY level we should be at. We are at 421 in a moderate recession. We are at we are basically at 421 now. We still got 6 months to go. Ha ha ha. Okay. Having said that, you guys who follow me, this is the hive. Here's the extension of the hive. Here's the hive. Same line up there, right? You want to know where I think SPY is going to be at the end of the year? Based on what I drew, there's a particular line I want to call your attention to. But for now, that line points to 460 by the end of the year. That's where I think SPY is aiming for by December 29th, last trading day, 2023. Now, what is the significance of 460? This line, you guys who follow me on Twitter, this is the June 17th low line. This line is what I believe, you want to call it the bull market line? I think that's the line. For the longest time, it was following the hive. I think it was following the hive to get us so that it can make higher lows. Just get us out of it. Get us out of the funk. Because it's forming a wedge. When you look at this line, why don't I just get to the point? I am calling this line the drone line. Because this is the one it's going to follow. It is following this line. So now you see it. You have the hive and you have the drone. I believe it's forming a wedge. It's breaking out of the wedge now. It's going up. You see it now? Okay, now, what does 460 correspond with? 460, when you look left, corresponds with the March 29th / April 1st peak. Is this starting to make sense now? We have spent the first 6 months getting to the August 16th peak. We are going to spend the next 6 months getting to the March 29th peak to end the year. The only way you can make the leg lower is to fail to make a higher high. What I believe the markets are really trying to do. Now, okay, hold on a second. So, you got 460 on the right here, right there. Draw the line straight left. Yeah, 460 is right up here. Draw the line straight left. That takes you right to the March, end of March, beginning of April peak. It's setting up for a showdown by the end of the year. It's setting up for a showdown. It has to make a higher high on the March peak by the end of the year to keep going higher. To keep going higher to by Q1 sometime 2024, it will challenge the January all-time high level. Now, Before you guys are like, yeah, whatever, man. You just draw this line from the June 17th low, and you just happen to just like going up here, and you just see what you want to see at 460. Okay, well, let me throw that under the bus for you uneducated hooligan bears. Trading economics. You guys go to that website a lot, right? I know a lot of you do. I do. Because you guys look at those economic data as they come out real time. CPI, non-farm payrolls, right? Trading economics. This is my source. I want you to look at January 2024 right here. What they project as the GDP growth rate. Look at January 2024. Uh-oh. Just below zero, is it not? And what does that just below zero represent? A mild recession. And a mild recession is calculated to be SPY 460. Here, remember, this is the slide you just saw. Let me zoom in again. 462.07 to be exact. I calculated this weeks ago, guys. 462.07 corresponds with a mild recession numerically. Taken from the Trading Economics website, they are projecting the same thing. Just under zero. That's a mild recession. There you go. Numerically calculated and proven again. But I want to show you this too. You know they like to play games. You know they like to do this. Just 2 days ago. 2 days ago. May 25th. Oh, well, hold on. We got to revise it up. Uh-oh. Uh-oh. So initially it was down. But sometime later, when nobody's watching anymore and nobody cares anymore, they revise it up. But guess who has always been watching? And I would say, and I would take it even further, not only were you watching, you orchestrated that. Oh, it was revised up. Oh, sorry. That's why the markets won't go down. The market maker is controlling the narrative. And you're going to see other tweets. I'm going to bash on people who keep relying on the news as if they know what's going on, as if they think when you hear the news is when the market also hears the news. Are you kidding me? The markets gave you the news on their terms. And then you want to come off like, yeah, I know what's up, man. I know how the market's going to respond to this. That's BS. And I'm going to prove it again. Remember that 269 I was talking about earlier when I said put a sticky note on that? Yeah, you remember that? Okay. On January 14th, right here, I talked about, I think the markets are tracking to 269. That's what they think the Fed terminal rate is going to be at. Okay? I calculated this in January, guys. That was 5 months ago. 5 months ago. 269. That's what I think the markets are at. That's why I was like, this is all BS. That's what you heard in the news. Oh, market maker, the markets are calling the Fed's bluff, calling the bluff. But then you hooligan bears, don't fight the Fed, don't fight the Fed. Don't fight the Fed. This is all a shell game. The markets were tracking to 269. They know the Feds are going to drop rates. Two days ago, I tweeted this. Mike Jones on YouTube. He says now the Fed is doing research to up the terminal rate from 2 to 3. I've been saying 269 since January 14th. Read this from left to right, guys. If you don't believe me, they are doing research now. This is how to give themselves an out. An out. Now to see if 2% should be the target or should it be up to 3%. As to make my point again, it's always just math. I just showed you that. Trading economics, mild recession. A mild recession calculates to SPY 460. It's math. Once again, I did this 5 months ago in January. Now they're talking about doing research. Once again, now you're just hearing about it in news, in media outlets like Mike Jones on YouTube in May, when I calculated that in January. So you want to rely on the news when you hear about it? Just because when you hear about it is not when the markets hear about it. I calculated that in January, and I can promise you I was months late in January. So by the time you're watching this on Mike Jones YouTube, you're about a year late. That's my point. Forget what you think you know about the news. You have to actually figure it out quantitatively using math to what the markets are really doing, not relying on charts from 2000, 2008, 2020, 1956, 1979, Paul Volcker. Who cares about those years? It has nothing to do with those years. All right, let's just get to some tweets. I'm just going to give you this little nugget. By the way, I think this is what's going to happen on Tuesday when we come back. Down, up, down, up, down, up. So, cheers to that. So, you know, over the recently, I've really evolved my analysis to go beyond just intraday. Before, I was just reacting to a lot of, I was reacting strictly to the intraday patterns I saw that day. I didn't really look beyond that day. But now my methods have evolved significantly. Okay? So that's what I'm tweeting about here. It really has evolved significantly. I am no longer reacting to what I see happening that day. I am now anticipating what they could do. And that's what I've been tweeting about lately. Okay? So yeah, it's been quite an experience. I've now shifted my paradigm quite significantly away from just, like, for example, focusing only on the 5-minute EMA 50. I still look at it, obviously, yes. But boy, I really take more of a macro look at it now to be able to actually anticipate what I think the market maker is going to do. Okay? So, ask the questions why. Not what. Not what do you think is going to happen. You need to ask, why did that happen? Why did the market maker pivot particularly right here? Why did they rise there? You need to keep asking why, not what. So, here we go. Oh, breaking news. Hold on, let me see what was this one? Core PCE on Friday. Yesterday. Core PCE and CPI tanked SPY in the pre-markets. Did any of that matter? Not one bit. Do not conflate what we hear in the news with when market maker hears the news. Do not conflate your interpretation of the news with the market maker's interpretation. You are creating false equivalencies. Do not do that. You are making that mistake. News is only to justify a predetermined, oops, I misspelled that one, move. Full stop. It's already been determined what they're going to do. And evidence of the core PCE not doing anything, CPI not doing anything to tank the markets proves it. They've already made up their mind. The question is when you and I figure out what they're actually trying to do. That's the question. So stop trying to interpret the news. Well, it's non-farm payrolls is up. Unemployment is down. Well, the market should do this. Oh, no. Stop it. Just look at the technicals and say, oh, that looks bearish. Ooh, that looks bullish. Okay? Everything's come full circle. Think about it, guys. For 5 full months of 2023, 5 months, we went from SPY 410 in December 13th to SPY 420. We moved 10 points in 5 months. Why? Because we've been consolidating. And now the move is going up. As I just proved to you. Mathematically and from the hidden charts using day trading principles I've always preached. It's going up. It's going up. It doesn't have time now to go back down to 396, kind of do that pattern it was doing from January up to February, down in March, and then up in April. No. We're out of time. We've been piddling around. We've only moved 10 points. We've only moved a net 10 points in 5 months. It's time to rock and roll now, guys. It's going up. We're not crashing. December 13th, higher high. February 2nd, higher high. May 18th, higher high. May 26th, higher high. Look at the time frames now. The times that elapsed between the higher highs has significantly decreased. The consolidation period that took 5 full months in 2023 is over. Just showing you some important tweets. That was actually yesterday. Yeah. Let me zoom in. It's kind of hard to see. So, ES 1 hour. I've been preaching, I don't know if I shared this on YouTube, but the MACD -14 line, by the way, is the uptrend line. You start messing around below that line, the uptrend is over. That's what happened in mid-February through March. You went below -14. Now, what happened? Yesterday, Thursday, it went down here. I was tweeting on it. I was like, oh, here we go. Here we go. It went down here, pivoted, curled up, and then rocketed back. It didn't even bother making a higher low notch. It just said, see you later, and then moved. It's because it was in the plan all along. You got duped, you hooligan bears. I knew you would. I knew this was going to happen. I was like, oh yeah, this is it. It's going to do it. And poof, here we go. Went down exactly to plan. These indicators have been 100% accurate since I discovered them in January. 100%. The 1 hour bear line to go like make the next leg lower is -20. The uptrend line is -14. The 4 hour bear line is -35. Man, we have gone nowhere near those lines, especially in negative 20 and negative 35. And as of as of yesterday, boop, now you're at plus 10. You cannot crash. You cannot crash. You will not crash. It cannot happen. Nice little lag we got going on here. Here we go. The 1 day, the daily MACD, positive cross again. Yeah. You guys. So, for you guys who like to preach that you're the masters of the 1 day MACD, that, oh, you got a negative cross, you got a negative cross on the signal line right here. Oh, negative cross, you're going down. Yeah, the problem is, you masters forgot when you're in a bull market, you can go from negative cross back up to positive cross, negative cross, back up to positive cross again. This is the pattern observed in 2019 to 2021 in a bull market. It's just comical. You know, he's like, well, I know about the daily MACD. It's forward looking. Oh, really? Well, you missed this, didn't you? Okay, negative 14 MACD, ES 1 hour again. You pivoted there. You rocketed back up to above the zero line. Metaphysical impossibility to crash. Impossible to crash. I tested this theory on the MACD by going back to the 2008 GFC, to the 2000 .com crash. All of those, to the 2020 COVID crash. All of those. The MACD curled down and was below the zero line before the crash happened. It was already curling down. On September 5th, September 14th to September 15th, 2008, when Lehman Brothers filed for bankruptcy, the MACD was already curling down below the zero line. It was just that when the bankruptcy filing occurred, it accelerated the downward move. It was already curling down on the daily MACD. Right now, not only is the MACD not curling down, it's curling up above the zero line. You cannot crash. It will not happen. So stop it. I'm getting tired of hearing this. We're going to crash, we're going to crash, we're going to crash, we're going to crash. Just give you a little FYI. Oh, this is a couple days ago. The night before, May 20, it was, yeah, May 23rd. I predicted it was going to go up, down, up, down, up. How'd that work? Up, down, up. Yeah. That's what I'm saying, guys. My methods of analysis have changed significantly. I'm no longer looking at just intraday. I'm taking a step back and looking at it from a macro perspective, because I found that I needed to do that because it does affect intraday. Because now you can anticipate, I think it's going to do this. And not just solely react on what you see real time. So, I know some other YouTubes, channels, Maverick of Wall Street, Money Time Machine, Ron Walker, all y'all love to correlate, oh, the inverse, the VIX, the Dixie. Guess what, guys? What is it? HYG, junk bonds. If HYG is going down in 2022, that's a leading indicator. SPY's going to go down with it. All of that is bunk. All of that is just easy, like, what do I call that? They call that like heuristics. It's like, boom, what's your immediate impression? It doesn't require much thought. It's totally wrong to correlate these things. Right? As I say there, is that fair that I compare you to your siblings? Nope, it's not, is it? So don't do it. I never look at the VIX. I never look at the Dixie. I never read the news. I don't look at CNBC. I don't try to front run non-farm payrolls coming up this Friday. What I think it's going to be, what I think it should be. I don't care about any of that. I only care what I think market maker is planning to do with that information. And I only care with the technical setup with I think you're gonna drop this thing. That was yesterday. Megaphone breakout. Boom, boom, boom. Yeah, guys. We're gonna need a bigger boat. So there you have it, my friends. We are now entering the drone phase. And I talked about this a couple months ago. I actually said when it takes back 421, or when it takes back the August gap, I'm going to start talking about the drone. And now here I am, end of May. Hooligan Bears, you have been checkmated. Suckers. Feel free to follow me on Twitter where I give, as much as I can, real-time tweets to try to give you some idea of what's going to happen during the intraday action. Don't forget to listen to your favorite music as you are trading. It helps you get into the right state of mind. It helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.